Hello everyone. First of all, Happy New Year to all of you. Hope you had a wonderful Christmas and now ready for this new year, 2014. Um, First of all, um, I'm going to cover stocks to start with, and have a quick look at the US market. Then I'm gonna go on to potentially some other stocks on the UK market, and then I want to have a look at gold and a few setups for income generators on Forex. Right, so as is clearly written, um, new year, new profits. Right. So today is the 15th of January, 2014, and right, let's crack on. I'm going to exit this page, put my charts back up. Here we go. Right, this is well, actually, this is um, right, let me just go on to the triple M first. There we go. Right, so this triple M um, is actually trading in a it's a US stock, right? So it's looking at the US market first, and this is just a beautiful chart. It's just cycling nicely, making higher highs and higher lows. Got a nice trend line there as well. We place a trade somewhere here. I think it was here in the trading floor. I think it was that one. I think it was this one here. We placed it on the as a trader alert, and because we had a target here, I think it was 124. Yeah, it was this one here. We had a target at 124. We just counted the profit from here to here, but you can always remove the target and just trade your stop loss, trade it until you get stopped out. You probably get stopped out here if you're very aggressive with your stop. If not, you definitely get stopped out in this area here. Right? Obviously, it depends where you left your stop loss. Okay. So this one made just like 81, I think it was, and it could have been much more than that. Right? Obviously, as I said, depends on the way you trade your stop loss. So now it's setting up once again. So here it is. I'd also placed it today, a couple of hours ago, as a trade alert once again, because it's giving again higher highs and higher lows. Right, so these are the highs, those are the swing highs, and these are the swing lows. It's giving higher highs and higher lows, cycling upwards. It's bouncing off the 20 moving average. It's currently sitting on it. The US market is going to open in 32 minutes from now. Okay, it's going to open at 2:30 UK time officially, and now is the pre-opening. So now the market is going to be moving up and down, but it won't be official. At 2:30 opens officially, and then from there all the way until 9 in the evening. Right, so this is giving a great setup here, actually. Just try the phase one really. So you put an entry up here, stop loss down there, and off we go again, the phase one, right? That's what happened here, and there. This is not very clear. That's not very clear neither because of the cycles. Wait for clear phase ones and phase twos. Okay, so you have to wait for clear moves in the market, like that. Phase one, phase two, phase one, phase two, phase one, phase two, phase one, phase two, and so on. Okay, so that's one of them. Let's have a look at another one trading in the US, AMZZN Amazon. Here we go. This company is still flying, still going up. There is not much momentum to go up because it's not making new highs. So if you consider this one here as a high, it's not actually being broken. It's taken the previous high out just by a few pips, but it didn't close above, so that's irrelevant. It's a false breakout. Okay, it's not a proper breakout. Um, right. This could also be a trade. It's an inside bar at the moment. Present entry above the high and stop loss below the low, but then you'll be buying against this concrete wall here, this level of resistance. So you have to be a bit cautious with this one here. It's very bullish still. Again, personal preference, whether you want to take it or not. Me personally, I prefer Google, which is this one here. I personally prefer this one here. It's still making historical highs. You can place an entry just above the high of the bar and the stop loss just below. So you can put an entry just above today's bar and the stop loss just below yesterday's bar. I'm not gonna put it below the low of today's bar because it's gonna be overexposing the market. So it's better to put it below yesterday's bar and potentially even below the 20 moving average, just in case it comes back down and says hi to the 20 moving average. Let's say it triggers in and it pulls back to the 20 and it gives a massive low test. It could potentially stop you out and then go. So that's why it's better if you put it just beneath the 20 moving average. But then again, if it goes your way, you're gonna make less money as if you put a stop loss just beneath the low of the bar. So again, every method will have pros and cons. Okay, there is no definite answer. Well, to put a stop loss, the key is just to understand the market, understand the behavior of it, and then based on that you make your decision. Okay, right, fine. It's a nice trend line here too, pretty clear trend line going up. You're gonna copy and paste it, and there we go. All right, the lines are here. These are all the lines. Okay, it's all left click, so you do left click on the line and then left click, done. If you want to delete it, you'll have to do right click on it and then remove, and then you do right click again and you go back to the cursor, which is the same thing as clicking here on the pointer. Fine, now let's move on. Let's see what else we've got. Apple. As you might know, I'm still holding it. I'm still holding Apple. It's not reason to pull out, even though there is a double top formation here. There's a bit of a double top formation here. Came back down to the 50, which is fair enough. And now he's still pushing up. Fine. He came back down to retest this level. All good. And this is just this bar actually. That's just this bar. And he took the previous high out, closed above the 50 MA. Awesome. And we shall see what happens now. Whether it's gonna break this high or whether it's going to be messing about here for a while. Either way, it's all good. Yeah, that's fine. I wouldn't take it there to the entry stop loss there, because again you have a double top formation here, so you'll be buying it against this level here, this level of resistance. Okay, right, let's move on. Let's go on to some stocks for the UK market. Right, let's have a look at this one here. It was giving a pretty nice ascending triangle. Oh, excuse me. Just take all this mess away. Out. And when it was here, we said that it was going to be putting pressure to the upside. So it was building up the momentum from out of the ascending triangle, and then eventually we broke through the triangle and now it's just making high highs and high lows. It's looking very bullish still, and um, and it's currently giving a lotus bar of the actually no, excuse me, it's not a lotus bar. Yesterday was the lotus bar. Today it's just a buyer bar, but it's still looking very bullish, and it's just made a new high. Fine, came back down to retest this level here, and it's sitting on it. Fine. Um, there could be a trade here, an entry and stop loss held, though it's a bullish continuation. But the high, it made a new high. It's looking very bullish. So see if it meets your rules. This could be a nice trade to go for as well. Yeah, nice trend line too. Beautiful channel going up, and it's just going. So you can just keep an eye on it and see. And you can take it. And this is what I believe is going to happen. I think it's going to kick off to the upside again. Basically, it's just going to carry on going up, right? It's just this pattern here. And also the FTSE 100 is broken through the crucial level that we had. Let's have a look at the FTSE. Here we go. Broke through this mess here. Took a while. And is closed above. Beautiful. So this is now, well, this bar has to close. Actually, this is the FTSE 350. Very similar to the other FTSEs. This bar has to close, by the way. It's going to close in 2.5 hours, pretty much. So by 4:30 it's going to close. If it closes above, then that'll be a breakout. It'll be a clean breakout, okay, from the consolidation, and it'll be this level will be broken, okay. Let's go back. There's nothing there at the back. Fine. Go to the FTSE 250. Same thing. And then the FTSE 100. This is the main one. Let's have a look. Right, so it broke through this consolidation. So what's the other one? But it's approaching this level here. This it can still it can be a high test bar by the end of the day. That's why you have to wait until it closes, because that's what happened there. See that this bar, this high test bar, at some point was like this bar here, okay? And then look what happened after. It came back down all the way, and it closed within the first quarter. So it's a massive high test bar right at the top. So we have to wait. Although I don't think it's going to become a high test bar, to be honest. There are only 2 hours left for the market to finish off today. So yeah, we shall see. And then if it takes the high out, then we'll have to break through that high, and then it's going to carry on making new highs, and then it's going to give a lot of opportunities on stocks and shares, basically, so you can carry on buying them. Okay. Right, fine. Let's see what we've got. Now, the way you scan through, you go here, power play long possible, click on go, and you have one at the moment. Leave that alone personally. And the short possibilities from yesterday, there is one here as well, which is mining, I think it was, yeah. So nice trend line here going down. Well, not as powerful. Yeah, it's broken through there. So basically, it's still going down. Let's see if it was mining. You can actually see here that it was mining, right? Sector mining. If you don't see it, it means you have to go to the right hand side. So scroll to the right hand side, and then you'll see it here. Okay, you see the sector and the volume and all the rest of it. But if you open it up, you'll see everything here anyways. You see the open, high, low and close of the current bar, the previous bar, the volume, everything. Okay. Let's come through using the constituent list. Click on go, And now these are all of them. Mining, Viva, well, this still is very bullish. You can wait for a pullback, and then look for buying opportunities. Okay. It looks quite nice, I have to say. Quite clear. Just going. Can look for a nice 20 pounds. Right, next one. Let's see. Nothing there. Next one. BA. So BA dot dash 11. Nothing there. Next one. Barclays is flying. He's gone straight up to the top. There's a massive level here at the 300, and down here too. So that's the range on Barclays. I will leave it alone in this moment in time. Maybe if he pulls back, he's gonna give a nice entry of this level here. Maybe we shall see what happens. Next one. Here you can wait for a pullback and sell it again on bats. It's going up for a long time, and now it's making lower highs and lower lows. So what you can do is to wait for a pullback and then sell it. Okay. Maybe the trend line, maybe something like that potentially, like that. So you can look for the lower highs and lower lows. You can give a nice entry here, right? Let's see what else. Actually, yeah, just have a look at the weekly chart and see what it's doing there. Right, okay. And the monthly chart. Well, we take all this away now. On the monthly chart, it's having a massive pullback down to the 50 moving average. There is more room to go south still. This company's been going up forever, for the past 10, 20 years pretty much, yeah. And all it's done is to go up and up and up, and it went up to here, and it's coming back down again, like it's done there on the recession, and then we'll see whether it's going to give a bit of a low test of the 50 moving average and then start taking off. But you'll see the turning point on the daily, and then the weekly, and then the monthly. So now it's giving a low test. Down here. So we shall see what happens with it. This bar obviously has to close. This bar will close on Friday evening. Well, Friday 4:30, because it's the weekly chart. Okay. So each line is 1 week. So it'll close in a few days. Back to the daily again. And this is what it's doing. The low highs and low lows. And we said to wait for a pullback and then look for selling opportunities. Very, very bullish. Been going up for a while. Higher highs and higher lows. Right, and it just goes and goes and goes. Can wait for a pullback and look to buy. Maybe. Nothing there. Next one. Nothing there. Next one. Nothing there. Next one. Nothing there. Let's have a look. This one wasn't bad at all, actually. Not bad. Phase 1, phase 2, phase 1, phase 2, bouncing off the 20, and it's on its way already. That's a very nice one. That's resistance becoming support. Ignore the noise there. That's what actually, in fact, it closed on the level there. So ignore the noise, made a new high, came back down to the 20, and off it goes again. Okay, that's your pattern. There we go. Not bad actually. Not bad. Right. Look, it happened here again. You see that it happens over and over and over again. If you look for it, you'll see. Here we go. So it happened there, 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 and there. So resistance several times, right? Resistance, 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 and again resistance. Was messing about, then eventually broke through, made a new high, came back down, and it became support. That's right. And it was sitting on the 20 moving average, and then it kicked off, made a new high, and then guess what? It's done again. Resistance becoming support, and it's kicking off again. Okay. So this pattern will happen over and over and over again. It just happens. It doesn't matter if it's on gold. Doesn't matter if it's oil. Doesn't matter. Gonna happen on futures, on everything. It's just a common pattern, and that's when you have to take advantage of it. Next one. Right, this is sitting up here at the top. So, right, it's a bit further actually. It's up a bit further. It's up there. Fine. So yeah, leave that alone. Next one. Right. So this is how you scan through the market, and then make sure once you finish off, make sure you save it. So you go on page and then save page, so you can save all your analysis and you don't lose it. So next time you come, you have all your lines, and then it'll be easier for you to take it from there. Cool. Let's move on. Well, let's just go to my page. Right. Let's have a look at gold. Right, this is gold on the daily chart. This is gold on the daily chart. Fine. Came back down to here to the 1200. Came back up, back down again to the 1200, and that's where we are now. Cool. Let's go to the weekly chart. This is the weekly chart. Is it's giving a double bottom formation. Beautiful. And if you break through this level here, it's going to go down. If you break through the 1400, it's going to be going up, back up again. Okay. So far it's giving a double bottom formation. Fine. And the RSI is putting a lot of strength to the upside. Now if you go to the monthly chart, same story. It's giving a double bottom formation, and the RSI is putting pressure to the upside. Cool. Back to the daily chart. Same thing here. You can see the pressure that is building up. This is going down and this is going up. So it's putting a lot of pressure to the upside. There is the massive double bottom that you can see on the on higher time frames, on the weekly chart and the monthly chart. Okay. So basically, I've got these two lines here. If you break through that, it's going to be going up. If you break through this level and closes below down here, then it's going to be going up. There'll be more sellers in the market. So we're going to keep an eye on it and see what happens. I don't think it's going to break through that. We'll see. Today is pushing down slightly. Most likely it'll pull back down slightly and then we'll take off again. So we'll follow this pattern. So see what happens and then. Okay, look for clarity. That's what you have to do. Look for clarity in the market. Right, let's have a look at a few income generators for Forex. I've got this one here, which is just beautiful. Um, it's actually an income generator itself. If you go on, even on the sniper page, when you go to the daily chart and you want to have the income generator there, what you can do is to click on, you do right click, then you do formulas, then you go into the income generator formula, which is the income generator v1.efs, left click there, and it pops up. Okay. Once it pops up, I mean, you can always save it, and you can have the daily chart here on the sniper page saved. You just need to do page save page. You can always untick it. You can always go to right click edit studies and untick the box that says K2A income generator. You just need to untick it, click apply, and it just disappears. Okay, and you can put it back on, apply, or okay, done, back on again. So that's your income generator. It's making higher highs and higher lows. Pushing up, fine. Sitting on the 20 moving average. Well, he literally, well, there it kissed the 20 moving average. Here it almost touched it, not quite. Now, this was the great setup. This one down here. Okay. It was this one down here. It was this low test bar. It's a beautiful low test bar down here. Which is the phase 2. Then followed by not quite a low test. It's kind of like it's kind of rejecting this zone here, and it's at the end of phase 2, and it's also pretty much bouncing off the 20 moving average, and it's definitely bouncing off the trend line there, clearly. And that was an entry, stop loss down there, and off we go with it. Okay, off we go with it. Once day 2, once this bar closes, this massive bar, which days 2, then what you have to do is to leave it alone, and then on the next day you move your stop loss. You can move your stop loss and you can put it, well, according to the new income generator rule, which has been out for like a year or so, you have to put it 100 pips below the low of the bar. So once the bar closes, once today's bar closes, I mean this bar here, once this bar closes, you put it 100 pips below the low of the bar. You can use this tool, the segment tool, or you can use this box. So you go and do left click on the cursor window box here, up here, okay, up there, and then you put it here in the middle. Just sorry, let me just take that. There we go. That's the open, high, low, and close of each of the bars. Now, put the cursor on top of the bar. You get the low, which is 86.98, and you take out 100 pips. So that would be 85.98. Okay, so 85.98. That's 100 pips below the low of the bar. So the other option, as I said, is to use the segment tool, but for that you need to tick on this box here that says price ruler, and pick the color you want, the line a bit thicker, then make sure you save it. Defaults, save current settings as default, and then click OK. Once you do that, you'll be able to measure the pips from A to B. So you pick on the low of the bar, and then you bring it down. So the 100 pips will be somewhere down here. Okay. If you want to make it really, really precise, use the box. That's my suggestion. And then you just trail it. Well, and then the other income generator, the one that was before the new one, was like 2-3 years ago, and so on. In the stop loss was 5 pips below the low of the bar, so it was always 5 and 5. So 5 for the entry and 5 for the stop. Okay, so 5 pips for the entry above the high, and then 5 below the low for the stop loss, and then you do nothing on day 2, and then when you trail it, it's always 5 pips below the low of the bar. That was on the old income calculator. Now the new one is 100 pips below the low of the bar. The target hasn't changed. The target is still the white line, and you have to change it on a day-to-day basis, but never on day 2. Okay, day 3, day 4, day 5, day 6, onwards all the way. Never on day 2. So on day 2 you do nothing. If you're in the market, do nothing. Otherwise, you have to cancel the order. So if you don't get triggered, cancel the order. If you do get triggered, do nothing on the day 2, and then trade your stop loss and your target on day 3, day 4, day 5, and so on. Okay, fine, let's move on. So basically, once this bar closes, trade your stop loss and let it run. That's for Kiwi Japanese yen. Beautiful trade, a couple of days ago. Right, what else we've got? Euro pounds. Euro pounds. Here we go. Euro pound was giving a few selling opportunities, still is. So Euro pound is giving a few selling opportunities. This is currently giving a lotus bar, but it's irrelevant because the bar hasn't closed, and this bar on Forex is going to close tonight at midnight. Okay. So yeah. It's been giving entries to the downside, obviously, because the market is going down. So if the market goes down, it's going to tell you to sell. We're not going to sell down here, right at the bottom, because it's at the end of phase 1. You have to wait until it pulls back a little bit, and then we can look to sell it. So once this bar closes, you can look to sell it, entry and stop loss there, and then you bring it back down. Okay? Ideally, it should be on the turning point up here, and ideally bouncing off the 50 moving average and so on. Okay, but it's still a trade there. Entry and stop loss there, and off we go down. Cool. That's another one for income generator. It's actually for tonight. What else we've got? Canadian, he's just flying, still going up, fine. What you can do here is to wait for a pullback and then look for buying opportunities. Okay, this would be on USD Canadian dollar. It's just making higher highs and higher lows. Wait until it pulls back, wait for a lotus bar bouncing off the 20 moving average or the 50, and then off we go again. On the phase 1. Okay, so basically what I've covered is all end of day for everything really. End of day for US stocks, UK stocks, then we touched on gold, and then we looked at a few end of day patterns and a few end of day positions on Forex. Okay, just and a few income generators basically, and that's it really. That's it for now. Make sure you stay safe. Risk no more than 1% of your account. Don't forget to trade your stop loss. When you're trading end of day patterns and end of day trades, what you have to do is to basically most of the time you have to hold it. When you hold it, that's when it pays off. If you cutting your winning trades too early, then it's not gonna pay off nicely at the end of the month, because when you get caught, you're gonna lose 1%, and when you have winning trades, if you're cutting your winners, you're gonna have a 1.5 to 1, 0.5, 0.3, but actually that 0.3 would have been a 5 to 1 if you left it for a week, and that's where the money is really. So make sure you hold it, okay? Hold it and hold it. The more you hold it, you're gonna catch the whole phase 1. You can even hold the pullback and then catch the next phase 1 again, and then you're gonna go for big moves, 5 to 1s and 7 to 1s. And to be honest, you just need one of those a month. That's it. One of even, let's say 2, 3 to 1s in a month, and then you have 4 losing trades in a row. You're still making money. Okay, you're still 2% up. So and that's the key really. That's the key, is to hold it and be patient. Patience is one of the key elements in trading, as we all know, or most of us. Make sure you follow my advice. Keep it up, and let's have a profitable 2014. And yeah, and I'll catch you all within 3 weeks, I think it is. Again, Happy New Year. to all of you, and I'll catch you all soon. Take care, and bye now.